It's been a spectacular rally for the last 2 months. Let's see whether the technicals of this market have changed. Atul Surip joins in to talk about that. Morning, Atul. It's been a terrific run these last couple of months. Are the charts pointing still higher from here?
Personally, yes, I do think so. If you put it in perspective, you'll notice that when the market fell in October to the 2200 intraday Nifty levels, it's almost did kind of a 5-month of consolidation. And as far as Indian markets go, I think we formed a kind of a triangular pattern which broke on the upside. Now, my target for this upside breakout is 4100 on the Nifty. And the beauty about this rally is that it's been very smooth, barring a few little uncertainty last week. But I think the quality of move has been very good. The large cap participation has been good. The first wall or the first resistance which I feel on this journey to 4100 would come around 3750 to 3800. If you look at the charts over a longer period of time and you draw a horizontal line around 3750, 3800, you'll notice that this level is very, very important on the way up. Because when the markets fell in October, they were really forming a very good base around 3750, 3800, and then you have the big capitalization in October, which took us down to much, much deeper levels. So I feel that barring a short-term kind of resistances which may come around 3750, 3800, I feel that we would head to 4100. And the thesis for this move is that it's not just a case of India-specific move. It's not just a case of only Indian markets. You'll find that across the world, globally, justified, unjustified, whether the fundamentals support it or not, have really done very well. Look at the main culprit, that was the Dow. I mean, that also has done a great job in the last few months. And I see the Dow, which is around 8,000, moved to around 9,100. That's my kind of target for that. It's a 12 to 13% kind of move in the Dow. If you look at the markets where India is actually a subset of, you look at the MSCI Emerging Market Index or the MSCI Asia ex-Japan Index, you will notice that through these 4-5 months of October, November, December, Jan, Feb, they have all done a very good kind of bottoming formation and they have broken on the upside. And I do feel that these are markets which may still have another 16 to 18% kind of move. And I see no reason why India should not get an allocation. You will have hiccups, and I think that hiccups will be more global in nature, whether it's a stress test of banks in the US, so you may have the next few days which may be walls of worry. But I do see that globally, markets making another about 12 to 15% kind of move. Indian elections is something which most people think is going to be an important event. But I do think that markets today are more global in nature. It's global flows that are going to matter, and the interplay of asset classes that is going to be there. So I would see a 4100 target with 3750 to 3800 to be a very important resistance area.
Atul, morning. So on the basis of the technicals you've been tracking, how high would you rate both these statements? A, that the markets have made a durable bottom for themselves in October, and B, that we've put the bear market behind us and begun a new bull market phase?
I don't hold that view that we have started a bull market. I still think that this is a bear market rally, and the reasons for that is that it may be very large in percentage terms, but the fact is that I felt that there was a lot of people sitting on very high cash levels. Now, I feel that this rally is going to be propelled by, number one, the first phase is the short covering part of it, because a lot of shorts had built into the system. Globally, they had built into it, and they would kind of cover. And number two is that I find very high cash levels with professional money managers. I mean, a 10 to 15% kind of cash levels in India itself. And the balance of the portfolio which is there is also a little defensively skewed. So I think that you will see, which you are already seeing if you look at some of the performances of the funds, is a great phase of underperformance. And with this kind of rally, you will see that all this money, people who are sitting on the fence, people who are negative, etc., will be forced to deploy the money, not because they believe in it intellectually, but emotionally they will be forced to. There is such a left out feeling which you will see among professional money managers, and this I think will lead to this. The moment this surplus floating cash is deployed, I feel that the markets would have another leg down. Whether it will go to the previous bottom or how much there, how much lower, how much higher, that I think which I can only judge at that point in time as to how we top out. But I really don't think that we are starting a very big bull market, etc. I feel that we will go through a little more time-wise correction, a little more ups and downs, till all the money is deployed, till, a little more tears come in, and that's when I think really you will bottom out. But at the same time, these have been very good rallies. The percentage-wise, the moves have been very good. So I think it's important to trade these markets and to participate in them. The only key would be that not to get too carried away and think that everything is going to be hunky-dory. I think it's going to take its time. But tradable rallies, definitely. On the long side and short side, you're going to get both of them.
From here to 4100 is a pretty meaningful run anyway, Atul. I mean, it's about 500 points on the Nifty. For people who got left out, as you said, does it still make sense to get into the market right now and trade it on the long side?
I think, Mitali, that's like a very difficult question because each one has to assess his or own risk-taking ability, style of trading. And I personally think that, yes, if left to me, I still feel that there could be a tradable move ahead. One has to get in at the right time, and most important is the holy mantra of trading, which is stop losses. The more time I spend in the market, the more people I meet, the more I trade myself. I believe that there's just one line to trading, and that is stop losses. So if you have a very good exit strategy, I think that there is no harm in getting in the market. But for people who are sitting on the sideline, I feel that there is going to be a lot more pain. And pain not just intellectually but even emotionally, because you come under a lot of pressure as a professional fund manager, as a portfolio manager, if you're sitting on a very high level of cash and a defensive portfolio. Because when the markets are falling, you underperform the index and you say, well, we are stock pickers and etc., etc., etc. But even when the markets start bouncing up, if you're in 10 to 15% cash and a defensively skewed portfolio, you're again going to underperform the index. And I think there's going to be a lot of internal pressures, and I find a lot of people are going to throw their hat in. But unfortunately, I feel this hat is going to be thrown in at somewhere at the top. And once the last rupee weighting is going to be invested, I personally think we will have a sharp correction.
Let me turn this question around, Atul, because for a lot of people in the market, they are looking now, having missed out, to buy the declines. Where would you draw the line on any kind of a pullback, which is considered a safe pullback to still go long, and below what level would you get the conviction that the trend has turned and it may not be prudent to go and put fresh long money?
I think 3,300 on the Nifty would be very important, Ujjan. If we go back a week or so, you would notice that how the markets had actually gone into a bit of a long sideways range of between 3,300 to 3,500. And we had kind of made a rectangular a double top at 3,500, but it was bouncing back at 3,300. And then we broke out on Monday very, very aggressively. So I feel that 3,300 has acted as a very good support of last week to 15 days ago. So I feel that for a positional trader, though I know it's in terms of points it's very deep, but for a positional trader, I think 3,300 should be a very good support for the market. So if you're able to hold those levels and protect those levels on the Nifty, I still feel the uptrend would be intact. If 3,300 is violated, yes, then I feel that there is a feeling of trend reversal, and also a lot of shorts will start pushing the market down. So that's a level that I would look out for, 3,300 on the Nifty.